Good morning, Ali Hassan from DIFC. I'm actually based in London. I lead our global markets from here. And I've been involved with DIFC for 19 of its 20-year history.
I'm Jim Iorio, and I run part of the ExodusPoint business. ExodusPoint is a hedge fund based out of the U.S.
I'm Justin. I'm the principal at Kingsley Holdings. We're a single-family office based in Hong Kong. We have an endowment-style approach to asset allocation.
Thank you all. So, Jim, how about we start with you as a asset manager globally. From your purview, the offices that you have and what you're seeing across the world, what do you feel and where do you think is the most appealing place to have a hedge fund right now? If you could think about that, think about managing an operations and then the environment, the regulatory environment.
Well, we were founded in the U.S. and that's our biggest location. Can everybody hear me okay? That's our biggest location, and we take into account, I think, several things around what the different types of environments. So what are the most important things to running a business like ours? Firstly, talent. The ability to recruit talent is critically important. So having the depth of talent and also of a diverse educational system. So that's, I think, really important. That drives that pool of talent. Employment law is very, very important for us. Ease of incorporation, rule of law, property rights, access to liquid and diverse markets, access to investors, obviously that's critically important, and then credible regulation, and relatively low cost of compliance. As you kind of hinted to, Tom, that's become increasingly challenged in the U.S., but that is nonetheless, still one of the better jurisdictions to operate out of. And it's also important to have a very fair and balanced tax regime. Also something that's a little bit more difficult in the U.S. But so the U.S. is really has been the leader in those respects for us. That's why we're as large as we are there. The U.K. following, that's very similar kind of model, and so that's been very important. But the UAE has been really critical in our growth plan because of a lot of those reasons, actually. So they've been doing a great job around all of those dynamics and improving on those where maybe there's not as much depth. So talent depth, for example, is growing, but is growing importance for us there.
Yeah, and when you think of the hedge fund industry, in terms of the size of number of firms in the hedge fund industry, the majority of them still very much reside in the US. I think it's 2/3, if not 60% anyway, would be US based. And then after that, you have the EMEA region, which would include the UAE, and you've got APAC. But Ali, maybe we get your perspective. Obviously, you're coming with a great deal of insight from the UAE, or as we described it, the New World, in our briefing earlier this morning. But maybe you can give us a sense of how you think things are looking in terms of the landscape for hedge funds globally, and what would be of appeal if you think about the old world and you think about the new world.
Yeah, sure, Tom. Very interesting question. I mean, from a Dubai perspective, from a UAE perspective, I think that what has happened is nothing short of the world financial services or center map being changed. And it's not something that's happened overnight. This has happened and has taken 20 years in its development. So within, with the DIFC, because of the ingredients that Jim has mentioned, I mean, we're a jurisdiction within a jurisdiction. You have a common law legal environment. You have a conducive regulatory environment in terms of a pragmatic regulator operating to international standards, but there. And then you have a competitive taxation environment. So that and the talent migration that we've seen not only into financial services, but into the economy in general, particularly post-COVID, really accelerated. I think, I saw an FT article where Dubai, Miami, and Singapore were identified as cities that were benefiting from this notion that you're not necessarily tied to a location based on your activity. But the points that Jim makes around still having proximity to financial centers, having proximity to clients, those are important. And those are in fact underpinning the attractiveness of Dubai. So now you have New York, London, Dubai, Hong Kong, and Singapore. It makes sense. Before there was this great big hole in the middle, and yet you've got $10 trillion of client assets there. So it's not a revolution. It's a shift, right? But I think it makes sense.
And I guess, Jim, you alluded to it a little bit, but there is also that pro-business environment. I mean, that really is a big factor in the shift or pivot maybe towards looking at this part of the world, right?
Yeah, I think that's right. I should have mentioned also that Asia is still important to us. I don't want to leave anybody out, but it is Asia is not, as someone who spent time there, is not Asia. Actually, you have to speak very specifically about the different jurisdictions around the different compliance regimes and legal regimes in Asia. So it's we are in Hong Kong, Tokyo, and in Singapore. So we're very familiar with all of those. But the ease of doing business is significantly different. I mean, we've had some experience, a lot of experience around the world, and operating in different jurisdictions. And it's I would say if you think about it as you were describing it, Tom, the new world, it is very it's significantly more welcoming to capital and more welcoming to opening up your business and incorporation, and that's a significant difference than the old world, so to speak.
Yeah, at the same time, despite the upheaval that you've alluded to, when you think about the launch environment for the hedge fund industry this year, there are some notable launches being tipped for North America and for APAC. So why do you think this might be, Jim? We talked about North America, obviously, and particularly the US, very much being the stronghold for the hedge fund industry. But talk a little bit more about APAC.
It's an interesting market for sure, and there are many players. First of all, there's a lot of capital there, so that's part of it. So, and as I had mentioned in previous comments, that the markets are very unique, and you have to think about them as unique and different. And there are plenty of opportunities for single strategies in Asia that may not be the same as you would if you were going to open up in the U.S., for example. So they're much more diverse in terms of the opportunity set. It's much more quirky in terms of some of the regulatory environments. And so having the local knowledge is really very, very important. And so as for investors, being able to allocate to different strategies, specific strategies, it's a much different opportunity set in Asia than it is in, say, in the US or the UK, for example. Very, very different set.
And Justin, from your perspective, to bring you in as an allocator then, what's your sense of things in terms of the global fundraising environment at the moment?
Sure. I mean, fundraising is tough across the board globally, not just for hedge funds, for VC and PE. I think the only easy kind of asset class right now is private credit in terms of fundraising. I mean, when you hear about celebrity managers like Bobby Jane having trouble fundraising, that's alarm bells, right? From my perspective, I'm seeing a lot of atypical structures being offered to LPs, like first loss, like tax fee concessions, or shorter lockups. The one bright spot I would say is private wealth. we're seeing hedge funds that don't typically fundraise from private wealth tap into that market. So for example, for King Seal, we allocated to Elliott Management earlier this year. Elliott, it was the first time they fundraised from private wealth. They worked with UBS and Bank of Singapore, and they raised $500 million in 1 week. So there is still demand from the private wealth investors for these kind of blue chip multi-strat platform funds.
And you're based in the region, and as Jim said, there is, not to miss out on APAC, far from it. What's your sense of the local talent in the region?
It's tough. I think there's a shortage of talent, especially young talent. We're seeing a lot of these hedge funds pivot. Maybe they were previously just a China hedge fund. Now they're turning to Pan-Asia hedge funds. So they're now going to include Japan and India in their purview, and they're all looking to hire analysts that cover these markets, and there's a big shortage of that. So there's no shortage of Chinese analysts. There's a shortage of Pan-Asia, Japan, India analysts.
And Ali, we talked about this already, and you've mentioned it a little bit, but maybe you can elaborate a little bit more. I mean, there's been a huge amount talked about the UAE in particular being that hotbed for hedge fund activity. But can you give us a sense of what's happening on the ground right now, and as opposed to what maybe was going on for the last 12 months? What's this story looking like?
So as of today, within the DIFC, we have 60 hedge funds, 60, that are established or within the application process. Initially, it was, and we've got the majority of the large multi-strats, and initially that was where we saw the demand. But certainly single CIO models are now present, and across different strategies: credit, emerging market, equity, long, short, and so on. And of course, the hedge funds are now a subset of this wider wealth and asset management community. I mean, since day one of the center, the institutional, if I can call them long-only traditional managers, have been selecting DIFC as their credible location for engaging sovereign wealth funds, but also increasingly that private wealth that was mentioned in Asia is very much in play in the Middle East. It stands at around 5 trillion. So that's, that's been an important area of development in combination with what's already there on the long-only side. And, to Tom's point about new managers, we are actually starting to see startups, spin-outs, also select DIFC as their location. And by the way, there are other centers in the region, of course, and in the UAE, but 90% of hedge funds thus far have selected DIFC as their location of choice for the reasons actually that Jim set out. But going back to the spin-outs, so we've got the likes of Towler Capital, which I think is one of the largest hedge fund launches for 2 or 3 years, right?
Yeah, that's right.
And then there's Noventa, which Jim, you're linked to, and then and so on. So we're starting to see that. There's Crescent Capital as well, another quant manager out of Switzerland. So different strategies, different sizes. We have sub-billion-dollar hedge funds as well as the multi-billion-dollar. So it's thriving, and it's deeply embedded in that wider global financial center ecosystem.
And Jim, you're one of those firms that moved to the UAE, or certainly opened offices in the UAE. What was your motivation? What was the thinking behind doing that?
Very much the same, that we were talking about earlier. The ease of incorporation, the English law, common law framework. It's very important. The fact that you can own your own company. You don't need a joint venture partner, and that there's a credible regulator is super important to us. As I mentioned, that we started. I didn't mention this, but as we started small. We had one PM that was interested in going, and then we quickly gained a significant amount of traction, and it's actually now our largest, or in terms of growth, our largest region. We have a full office that we're opening with room for 40 people, which we didn't we didn't even have a year and a half ago. So all of those reasons were very important. And there's also there's a nexus that's kind of interesting there that we didn't think about until actually being there, which is to both India and to Israel, like having, talent from both of those places that we really hadn't thought of before going there, which is very interesting. And that's been drawing people from the UK as well, the ability to be.
Yeah, no, I was just going to say, in terms of, countries and their approaches and regions and their approaches, I think that talent piece is so important in terms of underpinning, what's going on in the UAE and Dubai. It is open and talent friendly. So, echoing Jim's point, we're seeing talent looking at the region from Europe, from Israel, and the proximity to India is fantastic, and you're getting a lot of talent that's emerging there. In fact, there's just moving over to tech, Israeli unicorn that I've been dealing with is actually recruiting programmers in the UAE because it's easier to get them in than actually hiring them in Israel or indeed Europe.
Yeah, we got an observation or a question from the audience. Two, actually, yeah. Thank you.
Hi, thanks for taking my question. A bit of a thought about the old world and the new world. In the old world, the West had the growing population, the wealth, and the geopolitical power. In the new world, it seems Middle East has a capital, India has a growing population, and China, and okay, maybe not China, but India has a growing population, and West still has the wealth. The question that I have for you is, how do you see, say, 10 years out, where would the regulatory powers, sit? One regulator, and as a context, one regulator that I see and observe in a lot of these settings, who is listening very intently, is the Indian regulator and what they are trying to do with their Gift City project, which they seem pretty bent on. So I'm very curious, on a longer term view, how do you see this pan out?
Great question.
Yeah,
Ali, yes, go for it.
Yeah, I mean, listen, I think that's a really interesting question. From where we sit, it's not about dictating the agenda. It's actually about putting in the right environment for business and then seeing how that develops. And so adopting international standards of regulation, providing those elements around ownership and free flow of capital and taxation that's going to attract businesses. I think in terms of dominance of one regulator over another, that's dissipated somewhat because of the overarching international bodies that you have now. So, if anything, I think regulation, to a larger degree, has converged over the last 10 years and will probably converge even more in terms of standards over the next 10 years. But the other trends that you mentioned are really interesting and do underpin what we've seen in Dubai and the UAE.
Was there another question there? Lady to the left.
Hi there.
Thank you.
The UAE just came off the grey list, FATF's grey list, but it's still on the EU grey list. How is this impacting or affecting decisions and also your business? Because obviously you're dealing with multiple regulators, huge amounts of money, especially from the US, where it's very strict. So what impact has that had and continues to have? Thanks.
Maybe I'll go first. I don't know if you have a view on that, but for us, not really, not at all, actually. It was a small eye issue for us being on the gray list for when we first were starting up, and it does create more work up front around documentation, counterparty documentation, things like that. So there is a lot more work that we would have had if that was not the case. But we've gotten through that, and from your perspective, it doesn't really affect us too much. Do you have a view on that at all, or no?
Yeah,
Ali?
no, I mean, listen, I think during the last 2 or 3 years, I mean, literally the DIFC has doubled in size. So it's 42,000 people, 5,000 firms. If you're on the grey list, it's unfortunate, but people can work through that. The DIFC and the DFSA is actually was given a very good rating, but it's a sovereign rating. So that's what we've been waiting for to catch up, and I think there's been some progress made. But from a business perspective, it doesn't prohibit you from doing business, right? There's some additional due diligence.
A lot more work.
Yeah,
up front.
So, but people have taken that into their stride, as Jim has said, and we've seen the growth that we've seen.
So, thank you. So, Justin, I want to bring you in and give us the APAC perspective, if you could, because the narrative at the moment, certainly from when I've been out there and just what we're reading and hearing about, is you've got Hong Kong is dead and everybody's going to the Middle East, or everybody is coming to London. But the APAC is more than, the region that is more than just Hong Kong. There's Singapore, and we talked a little bit of what's going on elsewhere. What's your sense on the ground out there?
Yeah, I mean, I think both Hong Kong and Singapore governments are quite laser focused on trying to raise a lot of the private wealth capital to have a lot of family offices be established there. Both governments have proposed very aggressive and very investor-friendly schemes to attract the capital. Hong Kong in particular, there's two kind of programs. There's one called the Capital Investment Entrance Scheme. That's for individuals that you only need 30 million Hong Kong dollars, of which 10 million can go to SFC registered hedge funds. SFC is our regulator there. The more headline grabbing program, it's the Family Office Tax Concession Scheme. That you need minimum AUM, I think 240 million Hong Kong dollars, around 30 million USD. And that can go all towards SFC registered hedge funds. So they're really kind of in that mode to attract as much private capital as they can.
Yeah, and the same question to you, Jim, if I could, please.
It's so specific, for each region, but the markets are continue to be very important for us. I mean, particularly with Japan coming out of this low rates regime eventually, I should say. But that's going to be more important. It is the third largest economy in the world. It's at least in equity space is a very deep market for us. So that's very important. And then China is going to go through, like we've seen capital move away from, certainly from investing in Chinese markets, because not only because of the issues they have in the real estate market, but also then just the willingness of the current regime to have capital flowing in. So you really have to be, but that's not going to last forever. So that will be a cycle that will be that means that right now it's probably not as attractive, but it will be attractive over time. So there'll be plenty of opportunities there. Singapore is important because of the same reasons we've been talking about with rule of law, and the jurisdiction there is critically important, and the talent that's there. So that's going to be very important as well.
Yeah.